Welcome to the Capital News. I'm your host, Alex Karitis. Today is Tuesday, July 14th, 2020. Thank you so much for joining me. Title of today's podcast, Banks Predict Worse to Come. This is on the back of several banks releasing their earnings statements today and their conference calls. We are going to get into an article that goes over JP Morgan, Wells Fargo, and Citigroup. Not looking too good, folks. Not looking too good at all. Basically, what the banks are starting to admit to are the very issues that we have been discussing here for months. Really, since the inception of this podcast a year and a half ago. But now, in the midst of this pandemic, now the light bulb seems to be going off over their heads. Oh, now we finally see it. Now we finally get it. So we'll discuss that, some of the quotes from the CEO, CFO of these institutions. Nonetheless, on the surface, some numbers came in better than expected from their trading revenue. I wonder how they did so well trading. Could it be the Federal Reserve's printing press? I think so. And had it not been for the Fed's printing press and the trading desks at JP Morgan and Citigroup in particular, these banks would have suffered losses. And we're going to talk about their loan loss provisions, meaning the money that these banks set aside for potential losses on their books. We are now at levels that we have not seen since the great financial crisis. And if my analysis is correct, and now also in agreement with what the banks are saying, or should I say what the banks are finally in agreement with me, these loan loss provisions are going to get even worse. That's not a good thing. They are understanding the reality on the ground. They are understanding data point after data point, survey after survey, common sense after common sense point that we bring up here on a daily basis. Renters unable to make their payments. 100% of the payment, 50% of the payment, they can't make them. Homeowners not being able to pay their mortgage. The landlords unable to pay their mortgages because their tenants aren't paying rent. Or at least not 100% of their monthly rent payment. The number of evictions that are going to happen. Even the banks, the CEOs, the CFOs are admitting that all that has taken place over the past few months has been an attempt to kick the can down the road. That's why they are saying the worst is yet to come. So all of that stimulus, quote unquote stimulus, all of that funny money is for absolutely nothing. And when you read between the lines of some of these largest corporations in the world, very powerful institutions, they are sounding the alarm. That's what this is. But don't worry, because we got more headlines out there with Moderna, biotech company that we've discussed here multiple times. Their vaccine looks promising. It looks promising. It's moving along very well within the process. Phase 1, Phase 2, it's coming along. Stock was up 16-17% today. All headlines. What's the reality? Time will tell. Markets don't care. If it's a headline, they're going to trade it. Further deterioration between China and the United States. The president this evening gave, I don't know if this was a press conference. I didn't even watch the whole thing. I'm going to get into this. I don't know if it was a press conference. That's what it was touted to be. It was claimed that this was going to be a press conference, that the president was going to make remarks in relations to Hong Kong and China, and the relationship between the United States and China. And then he might take some questions. He comes out, his opening statement is, well, the stock market was up today. The stock market was up today. Don't forget, ladies and gentlemen, the top 10% of the income bracket of the wealth bracket owns 90% of financial assets. So the vast majority of Americans don't own anything, or very little, to make much of a difference. Yet, this is what the man remains obsessed with. Why didn't he come out yesterday when the NASDAQ lost 2%? You never hear him on these down days. Only on the up days. We shouldn't hear him on any of them. This is not his job. Drives me absolutely crazy. Where's the SEC, the Securities Exchange Commission? Where are they? Are they investigating all this headline manipulation? So he comes out, opening statements. Stock market was up today. Then he gets into announcing that he has signed a couple executive orders in relations to Hong Kong and China, sanctioning some Chinese officials, yada, yada, yada. And then he goes off on a tangent on Joe Biden, making this no longer a press conference, but pretty much a campaign stump speech. I'm like, you have to be kidding me. I'm watching this with my brother. And even he turns around and says, what is he talking about? After he started rambling on for 10 or 15 minutes. I said, this is what he does. He rambles. This is what he does. I'm done with the president. My brother still somewhat, I don't know what to say, supports him, but he at least isn't in my camp. I'm done with him. Understand this. I'm done with him. Sick of it. This presidential election, the debates, if that's what we're even going to call them, that are going to take place in a couple short months, are going to be a national disaster. They are going to be a national disgrace. They are going to be a national embarrassment. Neither one of these guys, Trump or Biden, can string a sentence together. It is going to be a national embarrassment. It is. Their ideas, they can't string a sentence together. They're not going to talk eloquently or intelligently about their policies. They're not going to go into any great detail, especially not going to go into any great detail. He never has, never will. It's not what he does, not who he is. I don't know if he can't do it or chooses not to, either one. To me, that's just not good leadership. But the man is there. I voted for him. I gave him a shot. I am done with him. Not voting for Biden? I'm not voting. I'm not voting for this circus. Because that's all it is. Maybe the guy could have done it? No. No. When you sign off of these policies that do nothing but fortify and strengthen the swamp and the status quo, you are not getting my respect. You are not earning my vote. You're not getting it. See you later. You know, you have that drinking game, you take a shot every time you hear a key word or something like that. I think the key word should be, mark it down, mark it on your calendar that I said it here today. That word, if you really want to get drunk watching these debates, this national disgrace in a couple months, the word is look. L-O-O-K. That's the key word. Anytime you hear the word look during these debates, you got to take a shot. And the reason I pick out this word is because both of them, President Trump and Joe Biden, both use this word quite frequently, especially if they're up there and they're rambling, because they'll lose focus, they'll lose their track, their train of thought, and then they use look as some sort of safe work, get back to a safe space, if you will, to the starting point. Look, no, let's go, let's talk about this. Completely different than what they were talking about, but that's what happened. They lose their train of thought, their focus, and their safe word, if you will, is look. And then they go and they start talking about something else. So if you want to have a good time during these debates and get drunk, pick your favorite liquor, and anytime you hear the word look, take a shot. I will remind you as we get closer, but mark it down today that I said it here first. Now, for some of you, I don't know, obviously, where all of you live, and don't want to either. But I am in Pennsylvania, and this is a battleground state. The president carried Pennsylvania by a very thin margin in 2016 versus Hillary Clinton. So this is most definitely a battleground state. Typically, it's somewhat part of the blue wall, if you will, but it went to President Trump. So it'll be interesting to see if Pennsylvania goes back for Trump or if it goes to Biden. We will see, obviously, in a few short months. But because it is a battleground state, we are starting to see a lot of political ads from President Trump and Vice President Joe Biden. There is one particular ad, maybe some of you have seen it, from President Trump, and you have imagery of fires and protests and riots in the background, and it's an open phone call to a 911 emergency center, and you hear the voice on 911 saying, well, if you have this emergency, press 1. If you have this emergency, press number 2. But basically, regardless of what your emergency is, you're going to be on hold. You're going to be on hold, and they're not going to get back to you for 5 days. And basically, you have also, I think, the image of Joe Biden imposed sort of in the background of all of this. And the president and his campaign are making the argument that this is going to be the America if Joe Biden is the president. Now, there's one problem with this. That's taking place now. President Trump is the president. So how can you say that this is going to be the United States of America under a Biden administration when this is taking place now under a Trump administration? Joe Biden isn't even any longer in the Congress. He's a plain Jane civilian. Donald Trump wants to be the law and order candidate of 2016. Well, then this shouldn't be taking place under his watch. He wants to be the candidate of law and order for the 2020 presidential election, yet this is taking place under his watch. Now, make no mistake, I am not blaming the president for all of this. This has been in the works for years. This is a buildup. He just happens to be there, and he happens to be somebody who is not equipped to handle this type of crisis. He's not. Because he is not a unifying voice at all. At all. He is not the man for this hour. Neither is Joe Biden. So this is just another, of course, this is politics. This is politics. If you want to claim to be law and order, well, then how is this happening under your watch? And if you're claiming through this ad that you got to vote for Trump and these things will go away, then why do we have to wait until November for Trump to do something if it's within his power to stop this madness? Or do we have to wait till November, or do we have to wait until he is sworn in again should he win in January? So do we have to wait 3 to 6 months for this law and order candidate and president to do something about it? That to me is what that ad says. Now, of course, that's not what they're pushing for, but that's how I interpret it. And I think it's a bad ad. But it's politics. You'll read into it what you want. This is just the craziness that we are going to continue to see on both sides. I told you these protests were going to be coming to a theater near you. They are not going away. They will intensify. They will intensify between now and the election. They will intensify after the election, no matter who wins. This is not going to be simply a release valve if Joe Biden should win. And all of the Democrats and Antifa and anybody out there who supports Biden or is at least anti-Trump, this is not just going to be a release if Joe Biden should become president-elect. It's not going to happen. They're just not magically going to go away. There are too many structural issues in this country. They are not going away because they are not being dealt with, because there are no adults in the room. There is no leadership anywhere. Anywhere. When it comes to the business community, when it comes to the government. It's just not there to be seen. It's the people in the streets. Mainly in other countries. Because our lunatics in this country are more focused about statues than anything else, than the structural issues at play. There are a lot of people who are arguing against the justice system, and rightly so, and what took place with George Floyd and many others. That's an issue worth protesting. peacefully. Peacefully. These Antifa idiots are exactly that. They're lunatics. But they're not going away anytime soon. They're just not. That's why you're going to see an intensification of this violence, of these peaceful protests, in many cases turning into violent riots, the destruction of property, the harming of other individuals who are peacefully protesting. This is chaos. This is chaos. This is the United States of America. This is a banana republic. This is the type of stuff that happens in a banana republic. How many boxes need to be checked for you to buy into this? To believe it? The money printing, the borrowing and spending of money that we don't have, the nepotism, the fraud, the corruption. Our leader, the President of the United States, his senior advisors who are on basically any type of committee, task force, think tank, whatever you want to call these things, working groups, are his son-in-law and his daughter. That's what you see in banana republics. It's one after the next. But anyway, deterioration between the relationship between the world's two largest economies. Now, over the past 2 years, we've had BS headlines when it comes to a trade deal with China. Everything was going great. The stock market was selling off. All Trump had to do was send out a tweet, come out, make an announcement. Trade deal's on, everything's looking good. If he felt lazy, didn't want to do it, he'd send out Larry Kudlow, Peter Navarro, Stephen Mnuchin, Wilbur Ross, you name it. Anybody go out there and say, oh, the trade deal's going swimmingly well. We're in the final laps. Everything's going great. They're going to buy so many soybeans, our farmers are going to have to buy more land, more equipment, everything else. Not happening, not happening, not happening, not happening. So one would think, if it was such great news for the past 2 years, for any time to get one of these BS headlines out there, the stock market would go up, then one would think this. Couldn't care less. And the reason they probably couldn't care less is now they are being overwhelmed by the vaccine headlines, which we've already seen on multiple occasions have proven to be BS previously. Now, we'll see if this one comes to fruition, but previously, these headlines have been bogus. They have been BS. But we shall see. Further deterioration because now you have the stock market. Because the worse the news, the more stimulus there's going to have to be, the more money printing they're going to have to do. And that's all that's driving stocks. There is no economic growth. Even the banks are starting. The consumer's strong. The consumer's strong. He's healthy. She's healthy. They can go out and buy everything. Now even they are coming out and saying the worst is yet to come. So here is the article. This is out of Investors Business Daily. JP Morgan warns of moment of truth ahead. Prolonged economic pain as bank stocks report. Bank stocks largely fell on Tuesday after JP Morgan Chase said it was bracing for double-digit unemployment through the first half of next year on expectations of, quote, much more protracted, end quote, pain as rising U.S. coronavirus cases reclose the economy, while Wells Fargo said it was slashing its dividend. The announcements arrived as those banks, as well as Citigroup, reported earnings for the second quarter, a period in which big job additions, stimulus aid, and efforts to revive the economy clashed with a spike in COVID-19 infections, clouding financial forecasts. JP Morgan CFO Jennifer Pipesack, during the bank's second quarter earnings call with analysts, said the months of May and June will end up being, quote, easy, end quote, bumps in the road. Easy bumps. The economy, she said, will confront the, quote, moment of truth in the months ahead, end quote. Savings are up, incomes are up, home prices are up. JP Morgan CEO Jamie Dimon said, you will see the effects of this recession. You're just not going to see it right away. CEO Jamie Dimon. Again, let me repeat this. You will see the effect of this recession. You're just not going to see it right away. Says a multi-millionaire. I bet people who have lost their jobs feel the effects of this recession. I bet people who have lost their businesses feel the effects of this recession. He just thinks, oh, well, you know, people are getting unemployment insurance, they're getting an extra $600, everything's honky-dory, everything's perfectly fine. It's not. But even he is right in saying that we haven't seen anything yet. Read between the lines. He said to expect a murkier economic outlook in the months ahead. CFO Pipezak said the possible range of outcomes for the economy was broader than ever before. We are prepared for the worst case, Dimon said. We simply don't know. I don't think anyone knows. And that's true. We don't know. I think I said that yesterday. I know I've said it previously. Nobody knows. But I believe we are headed for the greatest depression, the depths of which we have never seen. Deposits and branches. Consumer deposits for the bank, for instance, jumped during the second quarter, according to JP Morgan. But that was largely due to stimulus checks and loans, so the funny money. The bank also saw a surge in debt and stock issuance as clients tried to pay down credit lines they drew on in March, when businesses raced to shore up their finances as fears hardened over the pandemic's impact. The bank said it saw increased levels of digital engagement as physical bank branches remained closed and people shy away from human-to-human contact. Some 1,000 of JP Morgan's bank branches are still closed. But management said it was too early to make any conclusions about consumer behavior. We haven't learned enough to make any changes to our strategy around these bank branches, according to the CFO. Here are their earnings. JP Morgan Chase earnings. JP Morgan earned $1.38 per share during the second quarter, above estimates of $1.26. Revenue of $33 billion beat forecasts of $29.5 billion. Net interest income fell 4% to $14 billion. As clients risk falling behind on payments, the bank's provision for credit losses rose to $10.5 billion, up $9.3 billion from the prior year. That is huge, folks, and that's what I was talking about at the top of the podcast. A big chunk of that was in industries hard hit by the crisis: retail, real estate, oil, and gas. The very sectors that we have been discussing here for months. Still trading revenue surged 79% to $9.7 billion, helped by an overall market rebound last month. Fixed income trading revenue jumped 99% to $7.3 billion. Equity trading was up 38% to $2.4 billion. Thank you, Federal Reserve, for all the funny money. Investment banking revenue rose 91% to $3.4 billion. Community banking revenue fell 9% to $12.2 billion. Commercial banking revenue grew 5% to $2.4 billion. And wealth management revenue rose 1% to $3.6 billion. On to Wells Fargo's earnings. While JP Morgan held to its dividend, Wells Fargo at that time said it expected to cut its own. On Tuesday, the bank followed through, ratcheting the payment down to 10 cents from 51 cents. Wells Fargo stock fell 4.6% to trade at $24.25 a share. Dividend again, folks, at 10 cents down from 51. That's an 80% decline. The bank lost 66 cents a share during the second quarter, far worse than the 7 cent per share loss expected by analysts. Revenue of $17.8 billion also came up short of estimates for $18.3 billion. The increase in the allowance for credit losses was $8.4 billion. Again, JP Morgan was over 10. Theirs is 8.4 for Wells Fargo. Average loans rose 3% to $971.3 billion, and average deposits grew 9% to $1.4 trillion. The pandemic has added to Wells Fargo's issues stemming from a fake account scandal that emerged several years ago. The bank said it was, quote, extremely disappointed, end quote, with the results and the plans to cut its dividend. You don't say. You don't say. Defrauding your customers, defrauding your investors, making up fake accounts, one scandal after the next over the past, 15 years since the great financial crisis, and before that, all of the fraud and abuse that was taking place within this institution. Now they're slashing the dividend. Quote, our view of the length and severity of the economic downturn has deteriorated considerably from the assumptions used last quarter, which drove the $8.4 billion addition to our credit loss reserve in the second quarter, end quote, said CEO Charlie Scharf. On to Citigroup's earnings. Citigroup, meanwhile, earned 50 cents a share, below estimates of 55 cents, but revenue of $19.8 billion beat estimates of $18.9 billion. As with its rivals, the bank set aside a massive amount of money, $5.6 billion, to cover souring credit. Fixed income trading revenue jumped 68% to $5.6 billion, while equity trading fell 3% to $770 million. Investment banking revenue climbed 37% to $1.76 billion. Global consumer banking revenue fell 5% to $4.7 billion. Citigroup stock fell 3.9% to trade at $50.15 on Tuesday. As with other bank stocks, that's more on Investors Business Daily. Of the big bank stocks, Citigroup is the most internationally exposed. In April, Citigroup said the pandemic had muted consumer behavior in Asia, the U.S., and Mexico. But it said deposit growth remained solid and that digital banking helped to mitigate the outbreak's impact. Deposit growth, again, is solid because of all of the funny money. If it wasn't for that, it would be deteriorating considerably. And the banks understand this. That's why they have their loan loss provisions at levels that we have not seen since the great financial crisis. A vaccine is not a panacea. Money printing is not a panacea. This vaccine, they are rushing it through. I am not going to trust this at all. I'm not putting that in my body. Ain't no way. These things typically take years to produce. Operation Warp Speed from this administration, I'm a little hesitant on. Not going to trust them. Not going to trust them. Especially when we have an administration that is obsessed with the stock market. Is this just pushing something out so we get a headline so the stock market can take off? Are they going to know this information? What companies are going to end up releasing these vaccines before the announcement? Where's the SEC? Where are the investigations? I'm imagining there's going to be a lot of fraud and abuse and corruption along with this. Just a hunch I have. Just a hunch. Then you have other surveys come out when it comes with respect to the PPP loans. Another survey. By the beginning of August, some 84% of these loans are expected to be exhausted. So any loan that was received during this program, these PPP loans, will be exhausted, used up within a couple of weeks as we enter the first week of August. Also asked of these participants, only 16% of companies are very confident that they will be able to make payroll without any type of government assistance. Only 16% are very confident. That's very, much in tune with everything else we've been discussing. At the beginning of this year, it was about some 14% of corporations were qualified as zombie corporations. 14% at the beginning of this year. It's now at 20%. And that's assuming that their accounting is correct, which I'm hesitant and skeptical of that, to believe that. So if it's even worse, I'm not going to be surprised. But that's exactly what's taking place. This is what happens when you're in a banana republic. This is what happens when you print this money. This is what happens when you have the government in charge of everything, central planners and these types of central planning committees. They pick the winners, they pick the losers. And a lot of these companies should be going bankrupt, restructuring, getting rid of their boards, getting rid of their C-suite executives, putting in the new entrepreneurs in management that know how to run the business. That's healthy. It's healthy for those corporations. It's healthy for those employees. It's healthy for all of those stakeholders. It's healthy for the consumers in the overall economy. That is what is supposed to be taking place. Will it take time? Yes. Will it be painful? Yes. But guess what, folks? All of this stimulus, it still takes time and it's still painful. But at least between the two options, things would get better if you allowed free market capitalism to do its thing. With all of this gotta do something stuff coming out of the government, coming out of central banks, we're going to have to pay a very hefty price tag for all of this, to the tune of trillions of dollars. Higher costs of living, lower living standards, inflation, stagflation, hyperinflation. People getting evicted, losing their homes, losing their jobs, losing their businesses. Losing their health insurance. Drug use will go up. Depression will go up. Suicide will go up. Because there is no plan, there is no leadership. It's just continue to do the same stuff. Continue to do the same stuff. Focus on the statues, the mask, and a can of beans. Don't pay attention to the structural issues that have been screwing over this country for generations. Pay no attention to it. Pay no attention to it. Wait for football season. Buy a can of beans, don't buy a can of beans. Those are the most important issues facing this country. There you have it, folks. Out of the mouth of the bankers themselves. The worst is yet to come. Stay diversified, stay vigilant, and stay with the Capital News. I am Alex Karitis. Godspeed.